Hey, it's Elliot. Welcome back to a new video. So as traders, investing is generally something people get into simply because you get used to finding opportunities and making money off a certain market, which is the FX or commodities or whatever market you're trading. And you will sometimes naturally want to get yourself exposed to a certain asset in a more investing manner, okay? So trading would be short term and investing would be longer term if we really had to resume it and simple it down. However, as traders, we work in a very specific way and sometimes investing is very different. And I have seen many traders wanting to invest in a specific asset just not using the proper ways, which you can't blame them because it is ways they use trading. However, investing in these manners will generally result in quite important losses or losses you did not expect. So let's start. So you need to understand that trading, as opposed to investing, you are basically taking advantage of small price fluctuations on the market, okay? So for my space, I'm trading shorter time frames on the FX market, so forex, and I am making money on the small price fluctuations. So how am I able to make significant amount of monies with only these small price fluctuations? It's by having leveraged accounts. So this leverage will allow me to make more money on the short term. So that's the positive. However, the negative is that, of course, there's an increased risk. So as traders, how do we minimize this risk? And I'm sure everyone does. It's by having very precise, of course, entries, but having very precise exits, whether it is in a loss, which is a stop loss, whether it is in profit, okay? So we reduce that risk of the leverage by using a stop loss and basically calculating our position size depending where that stop loss is. Now, the big mistake traders make when they want to invest in a specific asset is using that same leveraged account in order to make that investment. So let's say a trader is familiar trading FX and a little bit of commodities, and he wants to buy gold as an investment for the next 5 years. What he will generally do is go on the pair which is called XAU-USD and buy this. He does not know how many lots, because of course lots, he does not know what that corresponds to money. He doesn't know where to put his stop loss because he's holding it for 5 years. He doesn't know what the short-term price fluctuation will be, so you don't know where to place your stop. So that's the problem people get themselves into. And I have seen many traders losing significant amount of money trying to invest that way. So the issue of investing in gold with your normal leveraged account is simply that you will have to use a stop loss, okay? You will have to. So sometimes people will buy gold, let's say at $1,800. It will come down all the way to $1,600 where they had their stop. They don't want to get out of the position, but they will sadly have to simply because they had their stop there. So then other people may think, okay, I'm not gonna put a stop loss. However, you risk of getting margin called, where simply your position gets closed by your broker because that account is leveraged. So if you buy at $1,800 and it goes down to $1,600, you are not losing $200, okay, as an investment would do. You are losing much more because that account is leveraged. So for every trader out there, how do you invest in a specific asset? It's using different accounts, first of all, and it's investing in cash. So it's by using cash accounts with no leverage that you will be able to invest in cash in a certain asset, so for instance gold. So your P&L will literally be the price fluctuation of that specific asset. So if you buy gold at $1,800 and it comes down to $1,600, you are losing $200. You know exactly how much you've put in, you know exactly what is your loss, etc. And when you invest that way rather than trading it, the only way for you to lose the total of your investment is for the underlying asset to actually lose 100% of its value. So if gold goes from $1,800 down to $0, gold is not worth anything. You could have 4 kilos of gold, it's not worth anything, then you lost your $1,800. Now I know that the question I'll get is which cash accounts can I open or brokers that will allow me to invest my money and not trade it. So the main broker I recommend for cash accounts, and I'm not affiliated with them, it's simply that I have most of my money with them, is Interactive Brokers. So you can literally make cash transactions, so you can buy gold with cash with no leverage. You can also literally in a way trade or invest in FX using cash money, okay? So you could literally exchange euro for dollars. If that exchange rate goes up 5%, you've made 5% of your money without having any stop losses, without having any targets, and that's investing in FX, which will be very different from trading FX, as you know. So the link to Interactive Brokers will be down in the description. As I said, I'm not affiliated with them, so it's really a friendly advice. So I hope you enjoyed this video, and I'm sure at least 10 of you were going to make that very big mistake that usually costs a lot of money, and I'm not because of this video, so I'm very happy about that. If you enjoyed the video, please leave a thumbs up. Don't hesitate to ask me any questions down in the comments. I'll read everything, or you can simply send me a message on Instagram by DM. Make sure you check my other YouTube videos where I talk about investing, trading, finance, etc. I make a video on this subject every Sunday, so down below you can activate the notifications. It was Elliot. Have an excellent day. Peace.